Good day to one and all. This is Dr. Sivaraman of iknowindices.com. Hope I am audible to you. Let me display the PowerPoint presentation. Hope all of you are able to hear me. Not finding any response in the hotcom window. Okay, fine. I'll just focus the camera over that of the PowerPoint presentation. Good day to one and all. Fine. Tracking the forex market together, part 1 on April 27th between 9 and 9:45 GMT. We'll be tracking the market using the live market code page, and also we use specific technique or trading strategies to earn consistently from that of the market. So without any bias or without any feel that whether the market can go up or come down and things like that, without the help of the forecast, we will try to do a trade and see how exactly we are able to earn from that of the market. So there are three components in tracking the market. One is the forecast part of it, which I have been giving it on a daily basis in my website blog, iknowindices.com/blog. There the forecast is given on a daily basis. Besides, I have given many times the market reading techniques, how to read the market. So I'm going to elaborate more on the market reading technique now, identifying the type of moves, and those who have not been able to follow it can just listen to it and see whether you are able to identify the type of moves in the market. Then we can go wrong in our market understanding. So to limit the risk, we will be using the trading strategies. As a result, we will try to limit the risk as well as use it for either way trading. And that is what I'm going to explain in this particular webinar. I'll be giving this webinar in two parts. Part 1 is between 9 and 9:45 GMT, and after explaining how exactly the positions can be taken from the market, then I'll explain to you the results out of such trading decisions during the part 2, and also explain to you how exactly the trading can be viewed as a very profitable business during the part 2 of the webinar. So the tool we are using it is a live market code page. You can take it from any website, and so there in the live market code page, the important components are the bid ask, the high low, net change, and the GMT time of the 4 majors and 2 commodity pairs. And if you are able to get this code page, any code page from any website, you can just use it. I found that the code page as one such code page, and I'll just focus the camera over there. So now currently you come across, in the case of euro, it is trading around 1.3215, 1.3217, 1.3224 is the high, 1.3158 is the low. Then you find 6 pips negative net change from that of yesterday US session close. So the current time is 9:04 GMT. Then similarly in the case of yen, you come across it is trading around 80.6264, 81.44 is the high, 80.50 is the low, 36 pips negative net change is seen. And when euro and USD yen show negative net change, we understand it is a contrarian move, because euro is making the USD gaining move by making a drop, whereas USD yen by making a drop because it is a denominator currency. By making a drop, it shows USD weakening move. So USD gaining move and the USD weakening moves are shown by two different currencies, which is referred as the contrarian move. And in the case of GBP, it is trading around 1.618486, and 6195 is the high, 6154 is the low. 3 pips positive net change is seen. When euro is showing 9 pips negative net change, GBP is showing 3 pips positive net change. It is yet another contrarian move, because both are not moving in tandem. Then CHF is trading around 90.93, 90.94, 91.33 is the high, 90.87 is the low. So even CHF is closer to low, and which is showing 4 pips positive net change. GBP positive net change, CHF positive net change is a contrarian move, whereas Euro negative net change and CHF positive net change is the USD gaining move. Then coming to the commodity pairs, USD CAD is trading around 98.3840. 98.70 is the high and 98.36 is the low. 7 pips negative net change is seen. Australian dollar is showing about 9 pips positive net change and it is trading around 1.039799 level. 1.0402 is the high, 1.0354 is the low. So you find GBP and Australian dollar are showing the positive net change. But among the commodity pairs, you find that Canadian dollar and the Australian dollar both are showing the USD weakening move. Whereas in the case of the majors, Euro is showing USD gaining move, USD CHF is showing USD gaining move, whereas USD Yen and GBP are showing the USD weakening move. So you find the mixed type of moves happening among the 4 majors and 2 commodity pairs. This is referred as the contrarian move. This happens during that of the mid sessions. So with the help of the live market quote page, we are able to read the market to start with and compare it to that of the earlier session. I'll explain it one by one. I'll go back to that of the slide again. So looking into that of the live market quote page, we try to identify what sort of moves are happening in the market, whether USD gaining or USD weakening moves are happening in order to make a trading decision. Then afterwards we find out to which session we belong to. Now these are all the session timings followed by that of the players. It's not my own. These are all the session timings followed by that of the players. And Japanese session is 0030 to 7 GMT. 7 to 7:30 is the gap time. 7:30 to 13 is the European session. And now we are around 9 GMT. That means 1.5 hours after the start of the European session. So we are around that of the start of the mid session. 1.5 hours from the start is the early European session. The last 1.5 hours from 11:30 to 13 is the late European session. In between is the mid European session. Then you come across a gap time before the start of the next session, US session. That is from 13:30 to 20:30 GMT. After the 20:30 GMT market close, the net change is calculated as 00, that is a closing level, and from there yesterday opening is given in the form of a net change in the live market quote page, and that has to be given in a very sensible way. In some of the quote pages you find that they just take it arbitrarily, their local closing time, and try to give the net changes. Then that may not be of any use because the market is 24 hours. Now we'll be how to track the market using the live market quote page. Note down the high, low and the net change in 4 majors and 2 commodity pairs. And the highs and the lows are formed between 2:30 and 3:30 GMT. So around 3:30 GMT or after just about a few minutes after 3:30 GMT, if you note down the initial lows and the highs, and those initial lows and the highs are acting as a reference levels for throughout the day. And that is being used by the other players as a reference level in order to either take the market on the upside or take the market on the downside. Now I have made a note of the initial lows and the highs, and that is there in another slide. I'll just focus the camera over that of the slide wherein I have the initial lows and the highs. This is the slide I used to show during that of the Asian session live market analysis webinar between 5 and 5:45 GMT on Monday and Thursday. And there I explained on Monday and Thursday what are the initial lows and the initial highs. And today is Friday, 27th of April. The initial low was 1.3177. The high was 1.324. And if you look currently the live market quote page, now they breached the initial low during start of the European session and came down to 31.58 and come above that of 31.78, and they are not breached the high. Even though they have come to 1.3210 currently, they are not breached the high. So they made a downward move during start of the session, and then after inducing the traders holding higher level long positions to liquidate, they just gained the levels in the market, and now they are closer to high. Then again they are expected to make during the US session another drop and then try to gain. But in the overall, during the day, they are expected to slowly cut the low and not the high. This is what I explained it in today's forecast in fxtrade.net, and those who have been following it might be aware how exactly I explained that the session start time, they just wanted to induce the long liquidation, and late session they want to induce short covering. Either way, they will be making money. But whole of yesterday, they have been holding the market at the higher level and building sell positions. But at that time, everybody was bullish because it has breached, Euro and GBP breached most of the resistance levels and they have gone up. So everybody was expecting further rise today, whereas they just made the slide. Now, in the case of GBP, 61.69 was the low. They breached the low and formed 61.54 as the new low and come above that of 61.69, currently trading around 61.91. I'm just referring to the live market quote page and also this level which I've noted down around 3:30 GMT today. Now, in the case of yen, 80.50 is the low, they are not breached. 81.44 is the high, they are not breached it. And in the case of CHF, 90.87 is the low, which is not breached, and 91.18 they are breached and they have gone up to 91.33. So you find that they breached the low in the case of Euro, low in the case of GBP, and high in the case of CHF. All indicating that they wanted to do the USD gaining move, even though they have created the market sentiment of USD weakening, but they wanted to make USD gaining move. That is how they create the market sentiment and act against that of the traders. And in the case of Canadian dollar, 98.44 was the low, and they breached the low and formed 98.35 as a downward stop. And the high was 98.65, and they breached the high as well, 98.70. That means either way stop-ins, they have done it in the case of USD CAD in order to hold at a lower level because it was trading at a higher level, 99 area and above during the week beginning. So they want all the long holders to liquidate around that of 98 area with a further fear that it could go to 97 independently. And then later on, they are expected to gain the levels in the case of Canadian dollar from next week, USD CAD from next week. And in the case of Australian dollar, 1.0359 is the low. They breached the low and formed a new low, 1.0354. And the high was 1.0397. Now the current high you find in the live market quote page is 1.0402. You can understand how either way they had done the stop-ins. So there is no question of bullishness and bearishness involved. They set the initial lows and the highs, afterwards make the upward stop-in during start and or during the late session, and do the opposite during the other part of the session. So if they make a downward stop-in during start of the session, they make the upward stop-in during the late session. This is what on a session base they try to do it, irrespective of the economic conditions or irrespective of the statistical analysis or any sort of chart reading, etc. So you find that they breached the low in the case of Euro, which is USD gaining move and come up. And in the case of GBP also USD gaining move, they breached the low and come up, but not breached the high. GBP they breached the high and formed 91.98 as a new high. Only in the case of Euro they are not breached it and they are closer to that. And in the case of yen they are not breached low or high, and they already made a big spread between the low and the high. And currently yen is trading closer to that of the low as the USD weakening move. And in the case of CHF they just gained above that of the initial high and come down. And now you find 0.000 is the net change, and they come to 90.88, closer to that of 90.87 after making an upward stop-in. So here, as envisaged, they had done the upward stop-in as well as the downward stop-in in most of the pairs, excepting yen and also euro. Let me go back to that of the other PowerPoint presentation. So after noting down the initial lows and the highs and also the net change, I explained net change indicate the current level from that of the previous day US session close, that you can watch from pip to pip how exactly they are making a move on the downside as a negative net change. On the upside from that of the previous day close is a positive net change. So that is how the color of the net change changes. If it is in green, that means it is positive territory from that of yesterday's close. If it is red, then it is negative territory from that of yesterday's close level. Then watch whether the market is closer to low or closer to high. And if they are in the middle level, just relax. There is no point in taking a position when they are in the middle level. Now you find euro has come closer to high. They breached the high. 1.3224 was the initial high. They breached the high by about 3 pips. 1.3227 has become the high. And also in the case of GBP, they breached the further high. And yen, CHF, they cut the low, but yen, they are not breached the low or the high. And also in the case of Canadian dollar and Australian dollar, they have done the upward as well as the downward stopping. Above that of the initial high and below that of the initial low. Then the majors are active during that of the early and the late session. Crosses are active during that of the mid sessions. Now it is the mid session, so in order to handle the crosses, they are making the contrarian moves. If you refer to that of the crosses, we will be able to understand how big moves have happened in the case of crosses. But in the majors, you find nominal upward and the downward stoppings. Then, the most important thing is identifying the type of moves. I have been telling that they have done the stop-ins. So, how you define a stop-in and a false move? Stop-in is the one which happens in less than 30 minutes. A move which happens in less than 30 minutes, and it may go above that of the high and come below that of the initial high in less than 30 minutes, or go below that of the initial low for about 15 to 25 pips and come above that of the initial low in less than 30 minutes and reverse and go up. Then it is referred as a stop point. So initial highs and the lows are very important for us to understand whether they are doing the stop point or whether they are doing the extended move for more than 30 minutes. So here you come across a move which is for less than 30 minutes. During start of the session, during end of the session, late session, they make these sort of stop-ins. So that is what you have found during the start of the European session. On the downside, they made a stop-in in the case of Euro and GBP. Now they are doing the upside stop-ins. So if you find that there is a real trend for Euro and GBP to go upward, then they should not reverse and after making an upward stop-in above that of the initial high. In the case of Euro now, 1.3224 was the initial high. I'll go back to the live market code page. Okay, 1.3224 was the initial high. They went and formed a new high 1.3227 and come down. This is stop point. Hope you are able to understand. In less than 30 minutes. And here again they went up to 62.00 and came below. But still 61.87 was the initial low. They have to come below that. And here you come across the extended move in the case of GBP. That is why it is in positive territory when compared to that of Euro. Now I'll go back to that of the other type of moves. Now a false move is also a move which is similar to that of the stop point, but the only thing is the market goes up to that of the initial high and reverse without breaching it, or up to that of the initial low and reverse without breaching it. Then it is referred as a false move. So what they do is normally these false moves, they do it during the gap time. So they just quickly make a drop from that of the high up to the low, then without breaching the low come up in just less than 30 minutes and breach the high and stay above. And then in 30 minutes time frame start making an upward move. Why they do it? They wanted to just drop it in such a way so that the people think using the technicals might feel that it is breaching all the supports and going below. They do it in such a nice way. They try to breach as if the support is being lost. Then automatically the traders after the drop tend to sell there once the support is breached without waiting, because if they wait they may see further drop, because one or two occasions they would have seen further big drop, so immediately they enter sell after that drop. But the players reverse and go above that of the initial low and then further to that of the initial high and stay above there for about 10 to 15 minutes and start making an upward spike. So a trader who is sold after the drop becomes really struck if he failed to keep a stop there. So this is the main move, false move. They do it in order to trap the traders who follow predominantly technical analysis, supports and resistance, whatever be the type of analysis they do, and when they assume this is the level as a support, this is the level as a resistance, they just like that breach it. So they are all theoretical supports and resistance level, and they are not absolute levels. So absolute level in the sense like a iron beam, it should stop the market not going above as a resistance, or stop the market not to go below that. But if it filters out the market on the upside or on the downside, then it becomes a weak support and the weak resistance, etc. So ultimately what happens, the players make the false move during that of the gap time and also before the data release time. So every data release for that matter, if you notice it, on Wednesday, you know that FOMC interest rate decision was to be announced by 16:30 GMT, and also the press conference by 18:15 GMT on Wednesday. Today is Friday, day for yesterday. Then they made during the session start time a downward move in the case of euro below 1.32 and came up. And after 16:30 GMT data, they just made that drop and reversed it. And before that, 8:30 GMT data, the UK GDP was announced, and that was negative. So everybody has come to the conclusion it is 2 times negative GDP, so it is double recession. But what happened? GBP started going up again after a few hours. Then they made the drop during early European session, and people thought that it might come under the pressure, but again they gained the level in the case of GBP. Then after that 18:15 press conference release on FOMC, they started gaining the levels, and whole of yesterday they have been holding at a higher level. So people had simply discounted GDP data of UK, and FOMC data was given prime importance, or probably people assumed that it is a risk appetite, thereby they started gaining the levels. Now you find they are dropping. So this is how they create the market sentiment and act against that of the traders. So we need to understand. So ultimately understanding the type of moves is very important. And I explained that in the case of GBP, they are doing the extended move. They have gone above that of the high, initial high, 61.87, and they are staying there for more than 2 hours, not just 30 minutes and reverse. They are staying above for more than 2 hours, above the high, or below the low also they can do that. Above the high for 2 hours, and that means they are not cut new high. At the same time, they are staying above the high for more than 30 minutes, and up to 2 hours. They try to hold it that way and only then reverse it. This is the type of move you come across as a spike sometimes, but nowadays spike has become a rare event in the market, and they hardly make about 20-30 pips quick rise. But you know, about last year and things, even a year before, we used to see about 100 pips, 150 pips gain in just a matter of about 10 to 30 minutes. But those moves are all gone because of low volume in the market. And see, the players need to have a purpose for making such moves. When the traders are in scarcity, then not taking much positions, so there is no point in making such moves. Then you find the moves which are for more than 2 hours, namely the intentional move. So after making an extended move or a rise, and if they hold above that of the high, initial high for more than 2 hours, continue to breach the new high again. Continue to breach the new high is a condition. Continue to breach the new high after 2 hours. then they can rise that market for 2 sessions and start up the third session. That is referred as the intentional move. And similarly on the downside, they can breach the low and stay below there for 2 hours and continue to breach the new low and for 2 sessions and the start of the third session and then reverse. There are so many days I explained it, that how exactly the intentional move. They blindly reverse even though there is no data release. And I think on Monday they did it blindly. Everybody was telling there is no data release, and simply on the third session they started gaining the levels after making the week beginning false move on Monday. So the initial intentional move is for 2 sessions and the start of the third session. So that is how they have the specific moves. If you identify the move, suppose you identify it is an extended move, don't sell euro. You wait for 2 hours, and once they stop cutting the new high for more than 30 minutes, then you can sell GBP. Whereas in the case of euro, it has breached the high and come below that of the initial high, and staying here for more than 30 minutes, we can take a sell there. So in GBP, next pullback, we can just take a sell or wait for 2 hours once they stop cutting the new highs. Now it is 62.16 has become the new high. So in order to drop euro GBP during the mid sessions, they are showing positive net change in the case of GBP and negative net change in the case of euro. And this is how they handle it. And that I explained in a previous webinar that they intend to bring down euro GBP cross to 78 area, now from 81 area. Now, so we identify the type of moves, and also we use the live market quote page to see at live condition whether they are breaching the high or low and things like that. Then we also use the trading strategy to limit the risk. And most of the European trading platforms, they offer the hedging facility in the same pair, which is also known as the entry stop. And if it is not available, then we can use the stop in order to limit the risk only to about 30 pips. So as soon as a position is taken, we have to use either the hedging order or the stop to limit the risk. Move. Now you find that in the case of GBP, it appears like extended move, but they are cutting the high again and again. That means they may just make it, transform it into an intentional move. In that case, we wait for the third session and then try to take sell position in the case of GBP, not in a hurry. Whereas in the case of euro, we will try to take a sell position near that of the initial high, 1.3224. And if they don't breach it, and if they breach the new high, 1.3227, then we'll wait for them to finish the intentional move after that of the US session and then try to take the sell positions. So similarly, exit. If you are taking a buy near that of the low, we try to exit during the day near that of the high set for the day. And similarly, if you are taking a sell near that of the high, we try to close it near that of the low set for the day. And in case if the going is good, we use that stop at the entry and trail it at 25 pips from that of the position and trail it. And also move away the limit in order to maximize the profit. So market could either hit your stop or the trailing stop or the limit and protect the profit for us. Ultimately, our profit has to be protected. In the event, if it is hedged, when hedged. So suppose you have taken a buy position and keep a sell hedging order that if it's below and if it is hedged, what do we have to do? Then if the hedging is making loss, then close and keep another hedging order for 30 minutes. 10 to 30 minutes is a condition. For 30 minutes, being a beginner, you can wait up to 30 minutes, and if it is continuously making loss for 30 minutes, you close the hedging with a nominal loss and keep another hedging order. If it is a buy position below the market and if it is a sell position above the market, and try to see that we are keeping a trailing stop at the entry. Till such time you have to monitor the hedging. And in case if the hedging is making profit, then you understand that we thought that it is an extended move, but whereas they just made it as an intentional move, continuous downward move, our hedging is making profit. Buy position. So what we do? We simply keep stop at entry in the hedging and wait for the market to drop during the third session then close the hedging with a profit. So many of the people, they are not in a position to combine how to handle the hedging with that of the market moves. If they don't study the market moves, then they might be rehedged. But if they understand the market moves properly, then if it is not an extended move, we thought it is an extended move. After 2 hours, we have taken a buy and expecting the market to go up, whereas they have breached and hedged us and gone below. When we understand that it's an intentional move on the downside, we don't close the hedging. We try to keep stop at entry in the profit-making hedging. Once you keep stop at entry in the profit-making position, let them drop even 200 pips, 300 pips, doesn't matter. Our equity is not eroded. We are not under the grip of fear. Then once they start coming upward, our stop at entry will be closed and we can just book profit on the buy side. That is one strategy. The other strategy is, if you find that they are making an intentional move, simply close the buy position and maximize the profit on the sell side. Then the third strategy, you just book profit on the sell side, the hedging, after the extended intentional move is over. The next day they have to do necessarily the extended move. They alternate the moves in sequence. So during the time when they gain the levels, you book profit in that of the buy position as well. So these strategies are some more, but I just given you the possibilities how the hedging can be effectively used for either way trading. Now coming to the position taking. So now euro has just breached the new high 1.3227. 1.3224 was the high. Let me just focus the camera over that of the live market code page. Okay. Now euro has breached, even though they formed 1.3227 and came down and formed 1.3231. So you find that they are breaching the high. Here again they are breaching the high. So that means there is a possibility that they could do it as an intentional move after making a downward stop, and they could make it as an intentional move on the upside, and they breached the high, and 1.3224 was the initial high. They breached and staying above that 1.3224. And if it is more than 30 minutes, then we can try to take a buy. But today the focus says that they are expected to make either way stop-ins, volatile moves. So we will not try to buy after the rise here and take a chance, because we can buy, but we may gain about 10 to 15 pips profit, because predominant of the traders are trying to do the breakout trades. That is, after the rise they try to buy, expecting further rise up to that of the resistance level so that they can book profit. So players also know, okay, the traders enter in those times, they just induce them to enter into the market, cut the high by 1 pip, 1 pip, 1 pip, maximum 10 pips. Then start dropping it. So they induce the traders to commit positions by making 1 pip gain. And once the traders go in for a technical trade of buy above that of the high, they give about 30-40 pips profit, fine. They don't even give a chance for them to keep stop at entry. And they simply hold it and hold like yesterday and start making the slide. Then it becomes difficult. Here again in the case of GBP, they breached the high and staying above that. And if you would have seen it around the 8:30 GMT, probably you could have taken a technical trade of buy above that of the high and book a nominal profit of 10 to 15 pips. Now at the moment, since they are breaching the high, we will not take blindly sell position. So we identify that they are trying to do the extended move. So the session starts from 7:30 GMT and it is 9:30 GMT. They cut the high. 2 hours. Now further, if they don't cut the high in another 30 minutes, we can take a sell. Extended move, then we can take a sell. And if they just continue to breach the high after 9:30, around 10:15, then we simply wait for them to gain for the levels, or at least hold it till the late session and start of the US session. And when they make an upward stop, and we'll try to take a sell position. Then the market is expected to slide. Because after the intentional move, they have to make the swing in the market. They cannot continuously rise or continuously drop the market. It is next to impossible. You know that market means swings. It has to make up and down moves, and they may use various data release time as the trigger times, but there is no guarantee that as per that of the data, they are expected to make the moves in the market. It might be negative GDP from UK, but they can still rise GBP. There might be credit crisis in Europe, still they can rise Euro. And it might be a positive US data, they can still rise Euro and GBP and say that it is risk appetite. Same positive US data, they can drop and say USD gaining move. So keep all these things in mind and try to use your common sense and see how exactly you can take trading decisions. So at the moment, since they just breached it, it is 9:37 GMT, I'm not committing any position because I wanted to confirm it, whether it is an extended move or an intentional move. I just watch up to 9:30, 10 GMT. But by the time I had to finish the webinar, and in the event if they are holding, not breaching 32.32, I'll take a sell. This is my decision. And in the event they are not breaching 62.29 by 10 GMT, I'll take a sell there. If they breach, then I'll wait for the US session start and then I will commit the position. Anyhow, part 2 is there. At that time, I will try to explain to you how exactly the trades can be done. When they are making a move of this nature, then it is better to wait for them to make quick moves in the market and enter into that of the market rather than simply following technicals and take a position and it is not making profit. So whenever they make very quick moves, always understand quick moves are false moves in the market. And you know that in the case of yen, they just made a quick rise and drop. In the case of CHF, they made a quick rise and reached the upward, the initial high and drop. So this sort of quick moves, when they do, then you can try to enter into the market. When it is an upward quick move, stop cutting the new high for more than 30 minutes, take a sell. And start making a quick drop during start of the European session, then try to take a buy. This sort of trades will really give you profit in less than 30 minutes to 1 hour. So always try to see that your profit earning time is very quick. That means you have to identify the quick moves and enter into the term market rather than simply taking a position and waiting for the market to give you profit in about 6 hours, 10 hours, 1 day, 2 days and things like that. Then you tend to lose your patience, then market becomes difficult for us. So as far as the trade is concerned, I wanted to confirm it whether it is an extended move because they are cutting the high. So hope you are able to understand. I am just following the type of moves. Still, I have the trading strategy in my hand using the hedging order. Still, I will not blindly enter just because they gained the level. I identified it as an extended move, but if they continue to cut after 9:30, the high, 1 or 2 minutes plus or minus, it may happen because there is a delay report of the codes, etc. You have to take into consideration, not exactly 9:30. So 9:35, they just formed the high. This high they should not breach in next 30 minutes. Then I will try to take a sell position and show the results of that. Let me minimize the PowerPoint presentation and just focus the camera over that of the live market code page and try to answer to the questions which are asked here because I had to wind up the webinar in 5 minutes time. So if you got any questions, kindly ask. In case if you are not able to answer to those questions, kindly bear with me. I will try to answer to those questions during the second session. Yeah. Could you post? I posted the link. Oh, you want the link for the live market code page? Sorry, I forgot to give it. And see, when you see that I am giving the live market code on a daily basis, I have been giving the link, and probably you can save it in your favorite and use it for your studies. Then SH. If price breaks initial low 1 hour before European session, Okay. Now, if price breaks initial low 1 hour before European session, that means it is a late Japanese session. But then it moves above the initial low during first 30 minutes of the next session. Okay. Is it extended move? No, they had done the downward stop end during that of the late session. Then come above that of the initial low and come to that of the new session. A false move up to that of the high or middle level during that of the gap time. Then during the early European session, they again make a downward breach just to induce the traders to take wrong positions. So when they just make a downward move, immediately people holding long position might become afraid. There is going to be a data, then there might be 100 pips drop. So it is better to cut the position. Then later on they rise. So how many people have bought it during the drop, during early part of the European session? So if you question it, then you will be able to understand. Because of the market fear, we continue to miss the trading opportunities. And the only thing is, if you identify the type of moves, you will be able to really find that you look into that as the volatility, as the trading opportunity, rather than fear creating moves in the market. The next session, they had done the early European session, they made another downward stop during session start time and started gaining the levels. Now they breached the high and they again breaching the high. That means it is an intentional move. It's confirmed after 2 hours. They breached the high. So we cannot take sell position now. If we try to take sell position, we might be trapped. And only thing is, allow them to rise. How much they are rising it? Till early US session. Then start taking the sell position. That will be meaningful trade. Then in all you come across now, USD weakening move. Euro, positive net change, GBP positive net change, and Australian dollar positive net change. The denominator currencies are a negative net change, but still the net changes are very, very nominal. Less than 30 pips, excepting GBP. So still subdued moves only happening in the market. But still, it is better to wait for them to settle the moves and then make the reverse of it. As I explained in the blog, in fxtrade.net blog today, I just posted it, that they want the long liquidation to happen during session start time and the short covering to happen during late sessions. Every session they are expected to do that on a Friday. This particular Friday happens to be the month in time, and Monday is the last day of the month, so they are expected to make such moves. Then Prince, where do you see GBP by month end? GBP could be hovering around here because tomorrow, Monday is the month end time. Then afterwards they are expected to make the next week again. 30th to 4th of May is month beginning time. They are expected to bring in volatile moves either way. So they are not expected to take it to the higher level in a very big way or lower level in a big way. It will be more of a sideways move, but they are expected to make volatile moves on those time frames. Then afterwards, from second week of May, we could come across aggressive gains in Euro and GBP, and FX Trade is publishing on Friday the expected levels from that of the experts. I have given the levels there, and today it will be published during late hours in FX Trade, and you can just refer to it to know the levels, what we could see during next week and week after. Then Rajesh. Then extended move 2 hours. Is the time counted from start of the session? Yes, the time is counted from start of the session because they had just done the downward stop point first in about 15 minutes and started gaining the levels and gaining it. And as I explained that they normally make a downward stop end and come above and breach the high in about 30 minutes or so and start gaining it. And that is how the extended moves are done. So that was identified after a downward stop and when they quickly gain up to that of the high, it is identified as they wanted to do an extended move. But now we wanted to confirm whether it is simply an extended move up to that of the high, new high, and then start reversing, or still they want the short sellers to do the short covering after a big rise. In that case, it might become an intentional move. But nowadays, if you notice it, they are holding the market for a prolonged period. Only towards close of the session, they are able to squeeze. They are not able to squeeze the traders during mid-sessions. Only session close time, market closing time, they are able to squeeze the traders to do the short covering on long liquidation. So always it is from session start, from the time when the initial high breached. You are right. Okay. So no more questions. So let me go back to the PowerPoint presentation. So now you can understand my decision of not taking the sell near that of the high is correct, because they continue to cut the high and just making a dip. This is the way they just cut the high and dip, and they build the sell position and use the traders to take long position and also do the short covering. Long position as a technical trade, when they find that it has breached all the resistance and gone above strongly, so people might go in for a technical trade of buy above that of the high. Also, those who have gone short might think that market has reversed, gone for short covering, and fresh longs can happen. And those who have taken the buy position at lower level could also book profit. These things can happen. And afterwards, next session, what they are going to do is, so they are at the moment cutting the high for more than 2 hours. We identify it as an intentional move. And current high, you can make a note of it, 1.3242. And during your session, you can just note down what is the new high they have found to confirm that it is an intentional move. And similarly, in the case of GBP 1.6235, and you can find out in another 3-4 hours how then for the new high they are forming it. So I'll come back by 15 GMT. 13:30 GMT is the start of the US session, and 1.5 hours again after that, and that is the slot was given to me. So I'll try to do the part 2 of the part 2 of Tracking the Forex Market Together webinar. And I will review during that early US session how the highs, lows, and net changes are changed. And in case if I take around 10 GMT, a sell position in the case of Euro and GBP, I'll try to explain to you what happened to those trades during this particular part 2 of the webinar. So I will come back again 15 GMT and continue the Tracking the Forex Market Together webinar in order to explain to you what are the type of moves, how the players are doing it in order to earn money. It is not the strength and weaknesses of Euro and GBP, it is the question of making money on either side moves on a daily basis. Thank you one and all. See you by 15 GMT.